Okay, everyone. Hello, hello. This is Kathy. If you just give me a second, I don't know why my webcam is acting up this morning. Let me just see. Boris, do you want to say hello?
Let me see. My whole computer just went crazy with my webcam. I don't know what's going on over here.
Yeah, my webcam is also kind of acting up this morning.
Wow, my screen just nearly went. What's going on over here? Oh wow, this is crazy.
Okay.
New audio, new hardware. Use new hardware. New audio detected. Okay, I'm on.
I see you. I says your webcam's already in use. So let me see if I can crash something that may be using my webcam. Give me 1 second.
Wow, my whole other screen went off. That sucks. Okay, let me
Good morning, everyone. Just give us a couple minutes.
Yeah, you know, the usual, that's why we started early, because we always, you're always going to have tech issues here going on here. Okay, let me see if I can pull this over here so I can actually just see you guys. I want to make sure I see you guys on the comments. Okay, and where am I on this?
All right.
Jesus, wow. All
right, Boris, I'm going to let you say hi. I'm actually going to reboot and see if I can get my webcam to work.
Okay, guys. So you know what? Let me grab the screen here, guys. Give me just 1 second. I'm going to grab. Sorry for the a little bit of a screw up here. Hang on. Okay. I just want to grab my screen and show you my screen. Show screen. There's I am. Okay, here I am on screen, which I'm looking up here, guys. Let me. Okay. There's the lighting. Hi, good morning, guys. Give me just 1 more second. I just want to organize my screen here. Share screen. Change presenter to me. Show screen. We want to go to screen. Screen 1, I guess. Yeah, screen 1. Okay. Wow. That was wild. You know, like literally my our whole second computer screen just went off on the on the webcam. I guess it was some kind of a switch on hardware. Hi guys, hi guys, hi guys, hi guys. Let me just organize myself a little further. Good morning, everybody. We got plenty of time. 8 o'clock. I just posted up the Financial Juice website, just kind of like my favorite website for instant news. Hey, there you are. Hey, hey, hey. How are you? Oh, we don't hear you.
Okay, hello everyone. Yes, that was a fast reboot. I just need to now get all my screens reorganized again. But good morning. Did you ask everyone where they're from, Boris? And
I was just about to. You were so fast that I was just about. I just pulled up the Financial Juice website just so we can pre-prepare them for the event. But yeah, guys, talk to us. Where are you from? Where's everybody trading the CPI from today? The other side of the world? Oh, Kenya. I don't know what time of the day it is in Kenya. I know that it's 10 o'clock at night in Sydney and 1:05 in London because I got that on my iWatch right now. Italy. Oh, buongiorno. We love Italy, Paolo. Nice to have you with us. And where else are you guys from? Czech. Very nice. And Karen, hi Karen. We have some traders from my room here. South Florida. Where in South Florida, William? Are you close to Boca, the second home of all of my people, or no? And South Africa from Johannesburg. I think South Africa is like way ahead of us. It must be nighttime in South Africa. Afghanistan, no way. That Muhammad, you definitely win for the most exotic location we've had in our lives in a long time. I'm amazed. You're trading. Are you trading from Kabul? How's the internet there? Are you able to get us? That's amazing. Love to have you, Pierre. Bonjour, Pierre. I know it's like it's 2 o'clock in the afternoon. The great thing about Paris is they don't even start. The New York session doesn't start till 3 in the afternoon. When I was in Paris this summer, I got a chance to have lunch, enjoy myself, have a full day, and only then start trading. It's like the most relaxed way of trading I've ever had in my life.
I think this is really the best time of day to be doing these events, Boris, because we get such a global audience. I'm seeing a lot of my friends from Asia, Malaysia, Singapore, always near and dear to my heart, Thailand, Sydney, as well as, from Europe, Africa, US. This is really, the best time of the world. And I'm sure also, all of you are really tuning in to the big events that are happening. And you know that today is, the biggest event of the week. And if you don't mind, Boris, I'm going to grab the screen for a minute to share with them some of my thoughts on what is going to happen today. So as we all know, the U.S. inflation report front and center is, of course, not the only thing that is happening this morning. And, hello, everyone. Once again, I'm Kathy Lean, and this is Boris with BK Traders. So today we have a few things going on. Am I lagging for you, Boris, or is it just
I see. I mean, you're not lag. There's about a 5-second delay on YouTube, but you're fine. I mean, I see you on YouTube.
Okay. So if everyone else, if you hear me okay, just say, Kathy, okay in the chat, and so I know it's not something to worry about. But the U.S. inflation report, you should be. Oh, you're not looking at my screen. Hold on, I'm looking at my wrong screen.
Yeah, we see your.
So now you should be looking at my calendar, and on this calendar you'll see. Okay, first and foremost.
Switch.
What, Boris?
No, it hasn't switched yet. We got to. I'm just waiting. I just want to let you know that the calendar's got to come.
It's got a little bit of a delay. All right, so with the inflation report, with any piece of major economic data, it's all about expectations. It's not about the absolute change. It's about what the market wants to see, what the market thinks is going to happen, and what the market is positioned for. So, first and foremost, you can see from the forecast on this calendar that the main inflation rate.
Okay, we're still not seeing the calendar. I'm just telling you that.
I can see the calendar on the YouTube channel, Boris.
Okay.
I can see it through the YouTube GUI right now. So Maybe you can go to the channel and see yourself.
No, I'm on the channel. Hang on, I'm gonna go to the other computer, but go ahead. Go ahead. You talking? I'll just confirm with you.
Okay. Can you see my calendar? If you can see my calendar, say yes, calendar. Anyway, my point is that the overall inflation, everything's okay for us. Don't worry about it.
Okay.
The inflation rate is expected to go from 0.4 to 0.3. This is the headline number. The core inflation rate is also expected to slow from 0.4 to 0.3. But do not be mistaken. Even though inflation growth is expected to slow from 0.4 to 0.3, that may not be dollar bearish. It may not be a bad number because, of two things. First and foremost, the overall inflation rate, the annual rate, which is what the Federal Reserve focuses on, is still, if you look one line up, expected to grow from 3.2 to 3.4%. And so that would represent an acceleration in CPI growth. So CPI is expected to accelerate from 3.2 to 3.4%. And the core inflation rate is expected to go from 3.8 to 3.7%. So still a very, very strong number. Because remember, central banks like to see inflation at 2%, around 2%. And the fact that it's much closer to 4% than it is 2% is really, really bad news. So if you think about it, and you think about how we came off of this really good non-farm payrolls report, the market is dollar bullish. They're dubious, they're skeptical about whether a June rate cut is going to happen at all. They're already leaning towards something less dovish, something later. And then you have core inflation and inflation not expected to ease that much. If the numbers come in line pretty much with these numbers, what's going to happen is that you're going to see, what could happen, well, it's a moving parts. What I think could happen is you are going to see inflation, the whatever moves that are happening continue. You're going to see the dollar retain its bid. You're going to see, stocks, maybe sell off a little bit because hot inflation is bad for stocks. And, you could possibly see gold correct a little bit. We'll have to see. But if it comes in significantly weaker, like let's say inflation is at 3.5%, or the user, basically the monthly rate, is at 0.2%, then that would be bad news. So that would be bad news, and that would basically lead to a sell-off in the dollar, a rally in stocks, and bigger moves in the market. This is another thing. One of the Twitter channels that I really like is COMPENSATED Letter, and I encourage you to follow it. Oftentimes in these live streams, I share resources that I use myself, and I like COMPENSATED Letter a lot, especially when we're kind of analyzing what's happening in the markets. So with the COMPENSATED Letter, you can see, I've got a tweet that I've got pulled up right now that shows that economists across the board are looking for 3.4% annualized growth, which means that all the experts that are being paid, $1 million a year to crunch these numbers think that, inflation is going to be 3.4%. It's going to be hot. But this is what I really want to show you that I like that COMPENSATED pointed out, which is that here, March CPI inflation data is less than 12 hours away, and inflation has been above the 2% target, the Federal Reserve's 2% target, for 36 straight months. And if it rises to 3.4%, it would mark the second straight monthly increase. And inflation has not jumped for 2 straight months since September 2023. So if that happens, even if the monthly growth comes in 0.3 instead against 0.4, which is lower than the previous month, it may not be enough to drag the dollar lower, and it probably won't be enough. And yes, Twitter is not a safe space. We got to know where to go, and that's what I tried to share with you. So the other thing that I think is very important to realize is positioning. How is the market positioned? You can see it through dollar yen. The market, is bullish dollars. Positioning. So we started this talk by saying that when we trade news, it's important to understand what is expected, what is by economists, what the market is anticipating, and what is priced in, and how traders are positioned. So traders are bullish. They are long dollars, particularly against the Japanese yen. So they are already positioned for this move against the yen. Now, euro, you'll see with euro has rebounded a little bit, but so the dollar is pretty much flat against the euro. And if we get a hot inflation data, what I will be looking at is euro dollar, because ECB is expected to be dovish tomorrow. ECB is expected to pave the way for a June interest rate cut. Market is clearly cautious about being long euros. And so if we get a good number from the US, dollar positive number, I'm going to be looking to short euros. If we get, and pound, I don't like to touch because the vol is too much. Dollar Swiss is already moving lower. If we get a dollar negative number, the currency pairs that I'm going to be looking at is dollar Swiss and Kiwi dollar. Kiwi, last night, we had a RBNZ rate decision. And the RBNZ basically left interest rates unchanged, said they are keeping rates high for longer. So they said they're going to keep interest rates high for longer. I'm just going to pop on my moving averages just to be sure. So dollar Swiss definitely looks like a better bet than Kiwi, because Kiwi's already come up quite a bit. But we'll see. I guess I would say euro dollar is my favorite trade if we have a good number, and dollar Swiss, because we have more room to fall on the moving average basis, would be my preferred trade for a weak number. Now, we don't want to touch dollar CAD because we have a Bank of Canada rate decision today. And so, CAD's really not going to do too much. Gold, Boris will be trading gold. He'll shed his thoughts on gold once he comes back on, and he'll tell you how he'll be looking at gold. But in a currency perspective, euro dollar and dollar Swiss are the ones I'm going to be looking at. Dollar yen should also fall if we get a weak inflation number. And I think, I may be trading that as well, but I'm going to be a little bit more cautious. So euro dollar, dollar yen, and dollar Swiss are the trades and the charts that I'm keying up for the CPI report. And just to reinforce that, the market is bullish dollars already. That means that we have a weak number, and we need to understand what a weak number means. It means undershooting this, 0.2 on a monthly basis, and your analyzed rate coming in at 3.3 or 3.2. If that happens, then we're going to get a dollar bearish number, and I think dollar Swiss, dollar yen will be the opportunities to the downside. Boris, are you still online? Dollar Swiss is already in my zip sell zone, and euro dollar is double zip buying. And so since euro dollar is double zip buying, what you're seeing, one second. So it's double zip buying. So, that is something that, I think is important to pay attention to as well. So when we trade news and, with the inflation report, we never trade proactively. Sometimes we'll trade proactively if we have a strong opinion, but the market is already bullish dollars. And so, if we do trade news like big releases, then what ends up happening is that, the opportunity is basically to trade it reactively. And we may, the smartest way to trade is to basically wait for the news candle high or low to be broken. But there may be some opportunities right after the data. So I'll be looking for that. I'll be calling it out. Boris will be joining us again. He's having some computer issues. Gold, is gold is still in a very nice uptrend. It's still rallying. Now, the market is obviously very bullish gold. And so Boris is going to share with you his gold trading strategy and setup that is going to position us into gold trades. So he's going to be watching for that. So with Eurodollar, as I said, no trades. I know you guys are eager to get into trades right now. But if we get a dollar positive number, we're going to be selling euros. If we get a dollar negative number, I'm not going to be, even though I have a double zip buy signal, which means I have 2 white candles as my setup, I'm not going to be buying euros. I'm going to be selling dollar Swiss, which is pretty much the same trade, because I'm cautious ahead of tomorrow's ECB meeting. And I think that the market is going to be, I think that the ECB is going to be dovish, so I really don't want to be in any long euro positions. We trade news all the time. And, you know, we traded non-farm payrolls with our members. So there are plenty of opportunities if we get enough of a surprise and we're trading it after data. Of course, trading it after data is far less gambling than if we're trading it before the data. Because if you're trading it after the data, you already know what the number is. So you're less, you know, kind of just guessing, is it going to be strong or weak? And if you trade it before the data, you really are just guessing whether it's strong or weak. I'm going to use a 20 stop, 20 target for my orders in Forex. Boris will share with you. I think he's back right now. Let's see if Boris is able to turn on his webcam. He'll share with you the setups and the stops and everything that he's using for gold and indices. So I'm going to be looking at Forex trades. Boris is going to be looking at gold and indices. It's going to get chaotic. I'm going to be calling out trades. He's going to be calling out trades. And, you know, we'll do the best to keep it easy for you to follow. But for the most part, that's what we're going to be watching. And so many are coming late, and I wish you came on in time, because we talked about how when it comes to trading news, it's important to know what is expected, how the market is positioned, and what is priced in. And with the inflation number going back to the expectations, the market is pricing in. So the economists are looking for a slightly weaker monthly number, but a very strong annual number. And this would still be, and I showed this Kabeski letter, that the 36th straight month that we're seeing a 2% inflation target. Do you want to say hello, Boris?
Hi guys, I'm letting Kay kind of set you up for the pre-event, and I'm gonna have to be off camera because there's some kind of a hardware conflict with my computer. Every time I turn on the camera, it blows up my other screens, and I can't operate unless I have all the screens available for you guys. So you're gonna just see my charts and hear the dulcet sounds of my voice for the time being, because I'd much rather see what you guys are telling me, and make sure that I respond to all your comments than you know, have you on my face. So I'm gonna let Kay talk.
Well, Boris, they want to know about gold, and they want to know how you're trading gold. So we spent a lot of time already dissecting.
As always, we're never going to be trading gold before the event, because that's just pure gambling. Gold, we are very, very bullish gold. There's only two positions.
Share your charts for us so they can see that, because we've gone through.
Let me share my charts, and I have to grab the whole screen. Just you got to give me a minute.
Go ahead.
Okay, you guys have to. Why don't you give me just a minute to set up my screen and get myself organized, and then I'll come in and I'll tell you everything I think about. Okay, give me just 1 second, because I want to make sure I see your guys' comments on my other screen.
So as I said, dollar Swiss is already in my zip sell zone. So that will be the trade that I'll be looking to sell if we get a weak number. If we get a strong number, I'm going to be looking to sell Eurodollar, or I'm going to be, it's basically looking to sell Eurodollar or sell Aussie dollar, which is already, believe it or not, the weakest currency today. So when we trade, we always like to pair strong with weak. And if we look at Aussie dollar, you can see that it's already pulling back. And in some ways, I would say that Aussie may be better than Euro. So Aussie, dollar Swiss, Eurodollar are the three currencies that's going to be on my screen when we when we are going to go into this trade. So that's what I'm going to be looking at. Boris, are you ready to share your gold chart?
Yep. I just pulled up my screen. We're going to give it a second, and let's see if you guys are seeing it on YouTube. Over here, it's just going to take a second to transfer, hopefully. Give me just one sec. So I'm on my screen. I wonder if it's changing around. Are you seeing my screen yet?
Yeah, we're seeing your screen.
Okay. For some reason, I'm not seeing it on YouTube. Okay.
It's a delay. You know that. The voice is delayed too.
Okay. Now I finally see myself. All right, guys. Sorry. So hopefully you guys can hear me. I see your comments. So I want to show you, this is the gold screen, and what the most important thing you kind of need to understand about gold is on the 1 hour trend. This is our proprietary scalp indicator, which I'm going to talk to you about once the event happens, and we'll talk all about my strategies and how I'll be scalping and everything else. But this proprietary indicator scalper tells me lots of different things. So first of all, we can take a look at where the gold is today. It had a 64 basis point range. That's 64 100ths to 1%. So a little bit more than 0.5% move already in gold. So that's not bad, but it's still very, very muted. Sometimes it moves 1.5 to 2% a day. It's been a very, very active product. But more importantly, the single most important thing that my dashboard is telling me is that it's been bullish for 419 1-minute bars, which is I think 3 days already, 3 or 4 days, quite a long time in a bullish trend. Now, when a product is in a bullish trend, right, we only look to buy the breakouts. Now, so far today it's only been breakdowns. I call these little red candles tell us selling points. I call them little dumpster fires, good for selling. And then if you look over here, this little candle tells me buying points, which I call rocket fuels. So what we're looking for as far as gold goes is we only want to be buying rockets, because it's a very, very positive trade for the past 3 or 4 days. You can see if you're buying rockets, it's all been just profits over here for pretty much most of the day. Yesterday was just pure profits over here when you're buying these rockets. These are 1-minute bars that are basically breakout bars. Effectively, that's what you're seeing is just a big breakout bar. So once the breakout bar occurs, we like to go long the product with about a 2-point target on gold and a 4-point stop. A little bit of a negative risk-reward ratio, because these are very high probability trades, and almost all the time we get it done. So right now, as we stand, we have. Let me pull up the data. We're going to go look at how the data is going to trade. Give me just one sec. I'm going to go to Financial Juice. They'll just pull up the.
As we said, it's going to be a lot of moving parts, and we're just going to call out our trades. Boris will explain the setups later, and we're just going to see, what the market gives us. And I think that we'll see it in the price action first, what the outcome is, before we actually really, zero in on, what's happening in terms of the data. So we'll talk through the data once it's out, but of course, our priority is kind of getting those trade setups in, and making sure that we're looking at the data afterwards. And as I said, the market is positive dollars going into this, but cautiously so, because the dollar is very much overstretched. I am going to be looking at Aussie, Euro dollar, dollar Swiss, and even to some degree, I would even say dollar yen, but only if the number is weak, not if the number is strong, because it is already so strong already. So how much more can it really go, right? That's the age-old question. And Boris will be day trading gold. And Boris, we're gonna be looking at indices trades.
Oh, of course, we're gonna day trade indices, and we're gonna day trade golds, and I'll show you the indices trades. But as always, as Kay was saying, let's first look at the data, see what the reaction on the data is, and then there'll be plenty of time. I'm going to be with you guys all the way to 10 o'clock today, because we're gonna trade the reaction. We're going to relax a little bit. I'll show you my setups. I'll go through the trades that we did yesterday. We'll discuss the general philosophy of how we trade, and then we'll do the U.S. Open, which is when you get the second burst of liquidity, and we'll see how the U.S. Open reacts to whatever data is in. We have 1 minute to.
That's really important. Boris is going to we're going to trade CPI, but at 9:30, if you're staying till 9:30, he's going to be trading the U.S. Open.
That's right. We have about 49 seconds to go, and I sure Kate, previewed the CPI data, but they're looking for 3 against 4 on a month-to-month basis, 3.7 against 3.8 on the core. So anything better than that, obviously, is fine. One thing that maybe hasn't been mentioned, yesterday we had a huge rally last 20 minutes of the market because somebody said that Goldman Sachs got a preview of the CPI number and that it was cool. I don't know if that's true or not. There certainly was a huge buy-up rally in equity futures in the last 20 minutes that felt like somebody knew something. It's a lot of times it's just FUD. So we'll have to see if that was true or not. But the market, I think, is tilting cooler than hotter. So we'll see what the numbers are. I'll call them out. I have them on the screen here, but I'll call them out just in case there's a little bit of a delay visually here. So where's the data? And then the data just went dark. Where's my data here?
Well, the number is obviously very good because the dollar just shot higher. So we said we're going to sell Aussie, sell euros. 65.80 is where Aussie is at. Euro dollar is at 108.15. We're going to wait to see what the data is, but that's what I'm looking at.
So the data, I'm just sort of like, it was 3.5 against 3.4, which is hot. This actually, all the core is 3.8 against 3.7.
Okay, so we have basically gotten our 10 pips. So we're just going to scalp here, 10 pips in euro dollar, see if it snaps back, and then we're going to try to get a little bit more on that.
So what's interesting is if you guys, it's going to take a second to just change to my chart, and I'm going to hopefully stay on this chart. The gold chart just went from fully bullish to bearish, and I think we're going to just sell gold a little bit here with a 10. We're going to just basically sell this little dumpster fire. We'll see if I got into the trade. I do have the trade on here. Let's see if it's going to work.
So Aussie dollar's also gone plus 10. So we're going to close that here. Look to sell again on a pop. So Aussie dollar.
Gold is coming down, as you can see. I sold it here at 53, and I think I actually, well, no, I didn't quite make the purchase. It didn't quite make the target. Here it is. Is it almost a target? Okay, let's just kill it, close it, close. Yeah, it just made target. So let me show you how that trade went on the charts, so you guys can actually see it a little bit better. What we did here, just to kind of analyze it for you, this gives you just sort of ideas of how we scalp. Gold went, remember I said to you, I'm not trading gold short unless it goes bearish. It went bearish right away off the news. This is bad news, hot CPI data. So I suspect, like I was saying to you, that the Goldman Sachs, they were leaking Goldman Sachs knew the number. I thought it was the exact opposite. Goldman Sachs likes to always pull the rug, which is, make the market think the number is one way, get everybody into a position, because if everybody bought on the close yesterday, they're getting killed right now. So anyways, point being is
so BK traders, we got back in selling euro dollar at 108.06 and trying to ride it down. Bottom line here is that number was strong. We zeroed in on the trades that we were going to take before. We planned our trades. We said that we planned our trades. We said that we're going to short Aussie, short euro dollar on a strong US CPI number. That's exactly what happened. So we had our charts already keyed up. We sold Aussie, we sold euro dollar for, initial, scalp move, 10 pips, which is basically, you just kind of get in and out of the markets, try to grab, the pips when you trade this. And then, if it snaps back, we're going to go more, but we're already short back into euro dollar, and it's almost 15 pips already, again, in the favor. It's at 107.90. And I think that, euro dollar, definitely has more room to go to the downside because the ECB is expected to be dovish. And so, that's, now that it's completely turned to the downside, I like it quite a bit. I think we're going to get to 108. There's some spike lows around 108.75. And yeah, so, the trades are working out exactly as planned. Sorry to interrupt you, Boris.
That's okay. So, Kathy's sort of trading the same idea as I am. I'm just going to show it to you visually. So gold in many ways is a currency, right? And you can see my alerts telling me that the NASDAQ now has turned into a dumpster fire. It's giving me a red candle alert. And we'll take a look at NASDAQ in just 1 second. But I just want to deconstruct the anatomy of the gold trade. As I said to you, really with gold, I do not go short unless the 1 hour trend turns short. And what happened today is, like, look at this one, like, I'm shocked. The CPI number in just 1 hourly candle, it turned the whole, 1 minute candle, it turned the whole hourly trend, which was 4,000 bars long, just boom, went right back to being short. And now it, went bearish short over here. And as it went bearish, this was the selling candle, the first red candle off of a bearish trend that gives me this little dumpster fire signal. I got short. Now I trade with a 2 target 4 stop. That's a scalp trade. You could also have easily made this into a positional trade. You could have traded maybe with like an 8 stop and a 4 target, and you probably would have made it both. But the type of style of trading we do is very risk controlled in BK for scalping for the prop account. This is my trade of a prop account, so I'm trading that live with you guys today. And there was a quick, very simple trade. You can see marked it on the chart here with my labels. We sold 53.8, bought it back 51.8. It was a nice clean trade. Now turning to NASDAQ and the NASDAQ chart, which also got very, very ugly. Just give it a second. And let me just go to the NASDAQ configuration so that you guys can see it properly. People are asking me how you get a hold of this indicator, the scalper indicator. This is something I wrote myself. It's only available to us in the BK room. I'll be happy. I'll post up I'll post up a link of how you can join me to pass the prop and join me, trading in BK room every single day. And you get access to this indicator, which gives you basically all the analytics you absolutely need to trade well. So, the only limitation, frankly, with the kind of trading that we do is that there's just one of me, and we can only do one trade at a time. There was obviously a huge amount. We could have done both NASDAQ and gold, given the setup that I showed you, and made money on both. But we kind of have a sort of like amazing amount of richness, like what is that called? Embarrassment of richness, embarrassment of riches in terms of the setups that we have. We have far more setups during the day that we can take, given the amount of instruments and the good analytics that this thing provides. So you can take a look at basically at the NASDAQ chart and just sort of look at what the analytics are. And the analytics are is that we had a 2.2% range already. Look at this, went from 400 to 18,120. Gee, I guess Goldman Sachs really made money on that one. I mean, I'm just laughing because look at what's happened before. Everybody was positioned. There was a rocket. Everybody was positioned for the long trade, for the big breakout trade, right? And then they just pulled the rug. I mean, truly, the greatest rug pull trade in the world is always out of them, and that's why I'm always thinking it's always the opposite of whatever the market is leaking. So huge rug pull. We went from buying to selling in one instant trade. You could have sold this over here. Again, I think this is probably going to be positional. We're going to be watching right now. We went bearish again. We were bullish before the market data. Now we're bearish. We're probably going to be building this bearish territory for a while. But I think the really interesting thing is will the market shake this off? Because this isn't the first time I've seen the market completely shrug off data and just go higher. More importantly, will gold shake it off? I'm going to be watching.
I personally, and I want to chime in on this, I personally think that gold is so overstretched. Traders are looking for an excuse to take profits, and so I think this could be a little bit more of a durable move. We at BK, for our members, have actually turned the euro-dollar short trade into positional trade from a day trade. I think that this has more room to run. I think that euro-dollar is going to come below 107.50. This really pushes rate cut expectations to September. I mean, definitely not June, and probably not July, and probably all the way to September. So I think this is, which is if you think about it, a stronger dollar, later rate hike, the rate cut is going to be bearish for gold. And it says here that let me see if I got some expectations. Now, I know it says the Fed swaps are now only pricing in 50 basis points of easing in 2024.
And yet, the gold is just printed a rocket on my
maybe.
chart.
So, what does this rocket mean?
Okay, it means that there's a breakout to the upside. So, we're trading obviously on a short-term basis. This is a 1-minute chart, and what this actually means is that this is a move of more than 7 basis points. That's 7/100th of 1%. Like sort of, it's just think of it as a big stretch. This is a more than a normal stretch away from the moving average, and that is what a breakout is. A breakout is basically a big move away from the average. Generally, that is a continuity trade. Now, especially if we marry the short-term signal with a long-term signal. Right now, the long-term signal is a little bit contrary to our short-term signal, which is why I'm not taking it. There's no confirmation because the long-term signal is actually still very bearish. This could just be a sort of, a fake-out move. But we love, this is why, by the way, I sold it the other way, because remember, the longer-term trend was bearish, and we had a big selling signal on the short-term charts. But my point is, having traded gold for quite a while this whole year, and just seeing how bullish this thing is, it's really become like Teflon. It's just completely indomitable. Because for every fundamental reason you would think gold should be going down. If the yields are going to stay up, gold is a non-yielding asset. Therefore, it's treasury bills are a great competition for it. Why would anybody want to be buying gold? But that's not why people are buying gold. People are buying gold because of sovereign debt risk. That's what I'm sort of starting to really understand on a fundamental basis as we trade this technically every single day. And what that means is it doesn't matter that yields are high. That's just a bad thing. You see, by the way, gold is going. Actually, I probably should have just gone long here at gold because this technical signal really gave us a good continuity trade. The reason why higher yields is actually positive gold is because people are scared that this is going to create a sovereign debt crisis, that the US government is going to have to pay such high interest rates for such a long time that it will not be able to finance these massive deficits, and the Fed is not going to be able to control inflation, and everybody's just going to be runaway problems. When you get into runaway problems and sovereign debt problems, then higher yields are actually bullish gold because everybody's running away from paper money. And I kind of think this is what's happening, because when you look at even just the microstructure of the product, it's just telling you a very, very clear message that every dip is a buy in gold for the time being.
Boris, I'm loving it. I'm loving these comments on YouTube chat where people are telling us they, made 40 pips on the euro. They, made $463. If you made money live trading some of the ideas that we have, let us know. Let us know in the chat so we know that we should keep doing this, because we're only going to do this if you let us know that you like it and you're making money from it. So please give us your feedback.
And people are loving my rocket. They're saying to me my analysis of gold is correct. So yeah, I mean, the beauty of the thing is, this is technical analysis, and charts don't lie. I mean, the charts are communicating graphically. What I've tried to do is to try to make it as intuitive as possible graphically what the market is actually doing, and the market is shrugging this off for now. So
look at that. Ravi made $17,000. Maybe you could send me another cup of coffee, Ravi.
Yeah, buy Kathy a coffee. Would you trade, Ravi? Tell us you trade. We want to know. That's a massive move. He must have shorted the hell out of.
We are encouraged and enthused to do this again. Tall made $500 selling euro. Egg Latina made 1,200 euros. It's all about planning the trade. It's all about talking about.
That is great. We need Kay. Why don't you give him a celebration emoji over there?
Do that. I mean, everyone else is giving him celebration emojis.
Okay. That's great. Okay. Somebody made $200. Good for you. Good for you guys. So that's wonderful. I'm really, really glad, and I'm hoping that you guys enjoy the tools, because they're there really to help you make sense of this all. Switching just to NASDAQ, just to kind of see. So here, I think, Kathy,
Kathy's sort of initial impulse is, and I just missed the trade because we're so focused on gold. We had another great sell trade here. You see a little dumpster fire over here? We could have taken this short over here in NASDAQ. That would have been a nice, quick, easy 10. I think this, by the way, is a deeper cut to equities than perhaps to gold. What I mean by that is higher rates for longer could do a couple of things that could hurt equities from a fundamental point of view. One, obviously competition from yields makes price earnings ratio compress, not decompress. That's one issue. The second issue is if inflation is still higher, up to now, companies have been completely able to pass on their cost of goods to the consumer and actually made huge profits. One of the reasons why the stock market sorry guys, I'm still suffering from a cold. Oh, and here come the sirens. It's not live trading with Boris unless we hear sirens in the background. What I was going to say is, up to now, one of the reasons why the stock market has been so strong is because profits have actually risen in the inflationary times because companies have increased their prices more than their cost of goods sold, and they're making record profits. That, I think, might be a question mark if we have a persistently high inflation data that now they're not going to, I don't think they're going to be able to raise prices much more beyond that. And if their cost of goods sold starts to increase, that will crimp down margins. So you have these two possible rethinks on equity prices: a compression of the price earnings multiple because of higher yields, and perhaps a deterioration in the profit margins, meaning the profits could be suffering. We'll see, if all of that is true, but the continuity trade to the downside. I'm looking at NASDAQ right now. I think it's very reasonable, excuse me, to imagine that we could take the 18,000, which is the really, really big, big support level. It would not be unreasonable in my mind's eye for them to test the 18,000. We have a little bit of a counter trend rally here right now, like a little small rocket. I'm not taking it because the trend is bearish. And I've really, if I learned nothing in my scalping life, and everybody in my room knows, I have a huge amount of bad habits, right? One of my favorite bad habits is to buy bottoms, sell tops. I absolutely love to do this. Like every fiber in my being says, oh, buy this, and it's probably going to work. But the problem is, for every time it works, it fails miserably at other times. And I only want to give you guys sort of the highest probability setups they can work. So my strategy going forward right now, unless we recover, like literally come back to 18,400, and I'm shockingly incorrect in my global macro analysis of what the market is thinking, or the market just simply doesn't care about anything I'm thinking. What we're going to be looking for is the dumpster fire signals. We're going to be looking for sell-off signals as the day progresses. So we'll just stay patient and look for the red bars when they pop up. Right now, nice clean counter trend rally. Could have taken this little rocket for a nice 10-point move, but we'll let it go. As I said to you, there are more trades than there are stars in the sky with the indicators that we have here.
Now, we're also getting a million questions about the yen. And yes, we did not touch the yen at all. I mean, dollar yen is up quite a bit after the CPI report. It's blown past its 34-year high. It went as high as 152.50s. And yes, it's in intervention territory. I'm not ignoring it, but that is not in the direction of the trade I would have taken. Because if it was a weak number, then and dollar yen traders were afraid of still being long dollar yen, and we could potentially have a compounded move to the downside, I would have shorted dollar yen. But instead, this one we're just going to have to let go because it's in intervention territory. The Japanese Prime Minister is currently in the U.S. meeting with President Biden, so I don't think that there is going to be intervention, although you don't know. Also, they usually like to intervene during Asian hours or during the quiet, low liquidity hours. But when the fundamentals, technicals, and don't really sync up, it's best to pass on that, because as Boris said, there's a lot of other trades. There's the gold trade, there's the NASDAQ trade, there's the euro trade, there's the Aussie trade. We don't need to trade something that doesn't make sense. And so that's why I wouldn't. And yes, it had a 50 pip drop for no reason, but that is not intervention. Intervention is like 300-400 pip drop in a blink of an eye. 50 pips is maybe just some option expirations and option orders, which is typically what happens.
Or just a large order that somebody dumped on the market because they
Right.
saw the thing rising, and they just you know, and everybody backed away from the order. That's very normal.
Right. The magnitude of that is definitely not intervention. You're going to see, these huge, minimum 100-point candles, and that's, not what is happening right now.
Right. Okay.
But my thing is stay away from it. Fundamentals are not in line with this. Well, it is kind of from the U.S. side, not from the Japanese side. Look for the opportunities elsewhere.
Okay. It's like many questions, but one of the questions that I'm having from some of the futures traders and stock traders is, hey, tell me what you think about the S&P. Now, we have the functionality to trade the S&P. We generally don't trade it a lot because we just like to trade NASDAQ. NASDAQ is the more volatile. But let's analyze the S&P. As a matter of fact, I'll be happy to analyze all the instruments that you guys throw out at me using my framework that we use here. The story with the S&P is even more bearish than the story with NASDAQ because the S&P never, gold, by the way, printing another rocket. So it's just, gold may really turn itself around.
What happens when we get two rockets? Didn't we just see two rockets on your prior chart?
On gold?
I think, didn't you have another chart up a second ago?
Well, so what you do is, like, let me just show you gold. Maybe there's a couple of rockets. So what you do is you take the trade here, make money, then wait for the next trade, take the trade there, make money, take the next trade, make money. The only reason I'm not taking the gold trades, and by the way, look how gold is recovering. I mean, I had this, and again, this part of trading that we sometimes do is more art than science. I'm trying to be really sticking to science, which is sticking to hardcore rules, trading only the instrument only in the direction of the larger trend. But sometimes during news flow, and a lot of times, as a matter of fact, during news flow, the art part of it really works well, which is that, as I said to you, I was looking at this price action. I was like, geez, they're just not letting it go down much. So this first signal would have been a great signal. But if this was purely in sync with our full rules, and this was a bullish trend, we'd be buying this, making money, buying this, making money. That's literally what we do all day long. It's just nip. We like to trade. I always say we like to trade like a pigeon. A pigeon, there's this great quote from Market Wizards from a guy who's Mark Weinstein, who's a great scalper. He says, I trade like a pigeon. And if you ever watch pigeons on the New York City streets, no car will ever kill a pigeon, because what they do is they'll grab just a small, bit of bread or a small speck of food and fly away right away. So they are always out of danger. Now, it may take a couple of specks for them to get full, but they are never in danger of getting killed. And that's literally how we trade scalping. We just take money off the table, take money off the table, take money off the table, go away. At the end of the day, it really adds up to quite a handful. That's just one way of doing it. There's lots of different ways we can do it as well. I show you some positional trades that we could do as well. But the primary scalping approach we have is literally that kind of a thing, quick trades. And as I said to you, there's never a shortage of trades. So while it's a little bit quiet, now gold is certainly recovering. And by the way, we're going to be keeping an eye on gold because if gold literally turns bullish, like, I mean, the single most crazy thing that could happen is if we recover the highs of this, we go to 270. There is like the most shocking thing that I could imagine is gold going to 2,400 against the high CPI, which really will prove the sovereign debt thesis quite well. But we'll watch this. It's from here to there. It's quite a long way. We have plenty of time to watch that trade. But in the meantime, if we go back to the S&P, as I was kind of showing you, just kind of give you an analytics of the S&P. This is a classic scalp that I would do in the direction of the big trend. The big trend is a dumpster fire. It's bearish, right? And the bearishness of the S&P it's going to take quite a long time to change. So what you're doing is here, very quietly, very patiently, just waiting for the next dumpster fire signal, right? We just basically printing counter trend rockets right now, counter trend green trades, little breakout trades against us. Oh, my trade evade just I got to relog in. Okay.
While Boris does that, for those of you that are hanging on, he's going to be trading the New York Open at 9:30. So even though the news has passed, there's plenty, obviously when the US equity market opens, it's going to have a reaction as well. So there's going to be plenty of opportunity at the New York Open to trade gold as well as the indices. So stay on if you want to trade the New York Open with Boris. I personally had to drop off because I got to head out to a meeting. But you know, we had some really nice trades. I'm so glad that you guys made money this morning. And you know, and Boris's rocket indicator is part of his Pass the Prop Academy, which he'll tell you about if you want to, you know, get the indicator and learn how to pass your prop challenges. And of course, if you want to pass the prop challenge, we've got that discount, 80% with Apex. So definitely click on the links that are coming through the chat. We'll also be dropping that into the description of the video. But I'm so happy you guys made money, or some of you just said I avoided losing money, which is basically the same as making money.
As Ben Franklin said, a penny earned is a penny saved, right? So
So
guys,
great job.
Yeah, great job. I mean, Robbie did 17,000, which is just a monster trade. Good for him. Super great. I'm glad you guys really enjoyed it. I'm glad having Kay coming in here and give us a really nice perspective on currencies. So you know, we're going to focus for the rest of the session with us on currencies, on gold and equities. And by the way, coming back to gold, I think we may have well, let's take this. I'm a little bit late on this. Sorry, guys. I'm a little bit late, so we might be chasing this. I don't know if it's going to be. Let me just take this trade. We'll take it. I'll take it for demonstration purposes. So I should have taken the trade about a dollar higher. So you know, one of the things, my cardinal rules is, you know, don't chase the trade. But you know, we're doing a million different things, and one of the things you'll see is that I'm trading always very controlled risk, very controlled size, so nothing is going to help me. As a matter of fact, you know what I'm going to do here? I'm trying to, you know, like if this comes in like, you know, plus 10 ticks, maybe what I'll do is I'll just move my buy limit over here. Sure, move my buy limit a little bit tighter just to see if we get this trade done. The reason why I'm moving my buy limit tighter is because we're almost there. We're almost there. Just missed me. And that's, you know, because I was late on the entry, and now it's going to retrace on me, unfortunately. Yeah. So sometimes you snooze, you lose. You know, I sold 58.1. I really should have sold at 59.5, which would have been, you know, which would have already taken me into full profit. But you know, that always happens when we're trying to do a million different things. Let's, you know, we'll see if the trade holds out. Now remember, this was a very strong counter trend rally in gold, far stronger than it is in Nasdaq and in the S&P. So I basically left my target tight. If it works, it works. If it doesn't work, there'll be plenty of other trades for us to go through. I want to actually look at the Nasdaq and at the reason why I want to look at Nasdaq is because I'm actually anticipating a red candle in Nasdaq, and I'm anticipating a red candle in the S&P. I want to see how those trades, because I'm quite confident that those instruments will probably be quite good selling opportunities, because I think the bearishness of those two, let me just move this over here, guys, to the S&P. The bearishness of those two instruments. Oh, here we go. We're almost there. We're almost there. Great. So I'm getting a bearish signal. Now, the other thing very important you guys need to see here, I do not trade until the candle completes. You see how like it teased me with a dumpster fire, but didn't quite make it. It needs to be. Looks like I. No, I guess the. Yeah, my gold trade worked, by the way. Sorry, I'll come back to the gold trade in just 1 second. I want to sell this right now. Okay, so I've sold. I sold Nasdaq 10-point target, 20-point stop. Let's see if Nasdaq is going to work. Oops. Lots of pop-ups on my chart. So that is a target for 94, and I think my stop is around 1813. So while the Nasdaq trade, you know, we're short Nasdaq right now. Maybe it's not. Maybe it's going to retrace me out, and that's fine. Let's take a look at deconstruct the gold trade, which I just took a little bit earlier. And surprisingly enough, remember I said I'm going to move the stop really tight because I missed the trade. So I sold 58.1. Oh, look at that. Nasdaq worked too. Okay. that worked too. So, oh no, the other way. I take it back. I got stopped on NASDAQ. So yeah, NASDAQ retraced. Gold worked. NASDAQ retraced on this first attempt. No problem. We'll go back again. If we get an additional dumpster fire signal, we'll go back on NASDAQ, trade it again, because I don't think we're done with the selling in NASDAQ. This, although I will say that from a technical point of view, the one thing that is encouraging for bulls, but it may be just a pause that refreshes, is that we kind of holding this base in front of the 1840 level. But I think when push comes to shove, we'll see if by 10 o'clock I'm right, if they're going to actually break down and test the 18,000 level. It's just too tempting, too big a round number, too many stops over there, and plenty of fundamental reason to want to push it lower. Let's take a look at the S&P. So S&P also gave us a signal. I did not take that, which is probably just as well. But you know what? Let's take it now. We're going to take the S&P signal. Let's see if the SPOOS works here. So this is a small trade on just 2 points. I'm just trying to get 2 points done here. And looks like I think we're done. And we're done on the. Are we done? Am I done on NASDAQ? Let me see. No, not quite. Let me go to DOM. Yeah, I think I'm done. I got done. Sorry, that was fast. Am I done? Hang on. Trade evade, positions, orders, positions, no positions. Let's kill the orders. For some reason, let's kill the orders. Kill the orders. Kill the orders. One of the problems with the platform sometimes is okay. So we got no orders. So I sold just kind of to let's just deconstruct this trade. Why isn't it showing me executions? All right, sorry. Let's go back to NASDAQ, because we have, as I said to you, we have so many trades now. NASDAQ is showing another red signal over here. So let's do it again. Let's go sell this now. And this will be much cleaner for us. Let me get rid of this so you guys can see the chart. So here we are. We sold at 98. What's going on over here? Did I buy NASDAQ? Did I make a mistake? I think I made a. Let me see. I think I made a mistake. I sometimes it's better to be lucky than to be good. All right. So I have a sell signal here, but now I'm going to just have to wait. Sorry, I'm just watching this signal. So I have a sell signal over here that I should be selling. Okay, let's see if this works. Okay, so I'm short at 88. Stop is 11. Target is 80. Okay, this is kind of like the correct orientation of the trade. Let's see if that works. I'm a little bit late on this because I was trying to do a million different things. But let's see if this trade is working. And what happened on the other trade is I think I bought the bottom and sold the high, which is great. Sometimes you get lucky going the wrong way. But now, excuse me, I'm orienting myself in the proper direction. There's lots of volatility here, so we have to be mindful of the fact that a lot of these continuity trades can retrace on us. There's clearly a lot of support here, so I'm trying. I'm really selling into support, which is a dangerous thing, especially pre-market. When there's not enough volume for us to push through. But as I said, we're trading small, and if it doesn't work, we'll just try again. As you can see, literally, I think I only had one bad trade out of the last 5 I took, and that's the whole point. We basically try to be as high probability as we can, and when we're wrong, we just get out really quickly. So this one is coming down. I'm actually gonna just you know what? I'm gonna flatten myself out on this trade. This trade worked for only about 4 or 5 points. It probably would have worked for more, just because I was mispositioned originally. So that's fine. So you can see that and what I'm gonna do now for you guys, by the way, is I'll make it clear. So you don't really need to see the the analytics chart anymore. Let me take the table off to really clean up the chart for everybody, so there's no distractions, and you can just see the labels trading. Okay, so let's get big on this, and I'll just deconstruct as many of these trades. You can see the labels. So, excuse me. In NASDAQ, this trade stopped me out, right? Then in this trade, I think what I did is I bought 87 and sold 93s by mistake. And then finally on this trade, I sold 88 and I bought 82. You can see that I sell 88, I buy 82. That was sort of like the proper trade. So I got, in the speed of the moment, I made a small mistake going long instead of short. But the bottom line is, we went short. The trades, and this happens, you absolutely have to be prepared for this. The trades were theoretically correct, but technically got stopped on one of them. And that happens all the time. You may be right on direction, but just simply wrong on volatility, especially after a high news event. The volatility could be so much that the spike up against you could stop you out. That's okay. You anticipate that, you plan for that, as I do, and you make sure that that you don't over stretch yourself both on size and P&L. You just simply stick to the plan. Now, we have more signals coming up, but I'm actually going to pause on taking any further signals because now we're coming into that witching hour between 9 and 9:30 when you get a lot of mispositioning in the marketplace, and we've essentially traded the initial reaction post-event, which was negative and direction down, using my dumpster fire signals as entry trades. In S&P, this was very, very clean, and you saw, the S&P trade here. I came in, I got a little bit better pricing because I came in on the upper side of it. Where's my? I wonder why the S&P is not showing. Let me see. Why is this not showing my? I go to settings. Okay, maybe this is it. I don't know why it's not showing my executions. Let me just see something. What's going on over here? Trading, text money. Huh. I don't know why it's not popping up on the chart. Anyways, you saw me take the short over here. It was a +2 trade. Super, super easy. And the S&P, as I said to you, I really felt strongly the S&P was the definitely a negative trade. So if you took this trade over here at 88, you'd be targeting 86, which easily would have made here with a 90. Oh, I think I know. No, that's right. No. I had it all correct. I don't know why it's not setting up on the charts. S&P is still showing us a negative, and I actually don't have a problem right now selling this thing. So let's make sure I'm correct on my. No. So look. This is what I was gonna say. Look, very, very important not to fall for the trick. You absolutely have to wait for the candle to close, right? The candle closed up, so the dumpster fire signal did not happen. So we don't do any trades. That's the really, really cool thing about the indicator. Keeps you out of marginal trades. This would have been a good trade had I been able to focus on that. Would have sold 85s. The stop would have been 89. I think it would have, and it went all the way down to we needed 83, and it just in the next candle over here would have gotten done over here. One of the when you're trading with me in scalping, we really only focus on NASDAQ and gold simply because there are so many trades to make. There's so many trades to take. You just you can't just cover all the instruments. But I put S&P here because I know some people are interested. In the meantime, I missed lots of good trades in gold. Well, I didn't really miss lots of good trades. We took this slice of gold over here to the downside. Remember, gold is negative now, right? And this whole counter trend rally kind of died out. So for now, the true trend is taking place, and we can watch gold very carefully because gold may actually be. I'm just preset myself up here for gold. If it gives us another red candle, that's going to be another dumpster fire signal, and we're going to be able to take it again. So while the stock market is kind of rotating through its pre-market conditions, we certainly can wait for gold, but wait for the candle to close. If it's not a closed candle, it's not a legitimate signal. So 3, 2, 1, and I guess now we can sell it. Okay, so we'll sell gold for $2 target, $4 stop. The target would be 47.1. Let's see if it does it. It's already had a pretty big sell-off, so it may retrace on us. But what I'm more interested in showing you is the actual process, because the whole point of live for us is to show you how the process works, so we can take as many trades as you guys can learn from the process. And if you're interested, come join us and do the process every single day. Because at any given day, we do 1,000 trades. Some work, some don't. Net, they work quite well. And so, I'm never bothered by any particular trade not working. So it looks like I pretty much sold the bottom on this one, but it was a legitimate signal, so I'll take it. I'll take it any day. If it doesn't, if it backs up through the stop, it backs up through the stop. We'll watch it and see how it trades. In the meantime, does everybody hear me okay on the audio? I just want to make sure. Give me a yes or no on the audio. Is your audio good, audio bad? Some people are saying the audio is bad. I don't have much control over the audio right now, but audio is okay for everybody? Everybody, yes, what? Yes, good or bad? I need the good, bad. Audio good? Audio good is okay? Audio is good. Okay, so it means that it's somebody on your end, guys. If you're having a hard time with audio, just log in, log out, come back. Okay, thank you, guys. Thank you. I just, I want to make sure it's not a global issue, that it's a local issue. So we're still, we're holding gold. Target is 47.1. You guys can see the chart pretty well, right? I really like maximize the screen. We have 20 minutes to the open, and Ravi, my man, the $17,000 man. You still didn't tell us what instrument you traded for 17K. Post it in the chat so everybody can be jealous of you. All right, good. I'm glad audio is fine. I'm glad video is good. I'll give you a little bit more space here, so we'll take the trading panel off. So gold is up and down, ticking. As I said, 47.1 is the target. That's what's the absolute low on gold? Actually, I'm curious. I am selling into the bottom. So you always have to be mindful of the fact that when you're trading these big continuation trades off of a news event, you're selling into the bottom, and and it looks like the bottom. Look at that, boom, we're done. And so the gold trade worked. Yay, Robbie, you did a good job. So another dumpster fire signal, but we're going to kind of stop on gold for right now. Just give it a little breathing space because we are hitting the bottom. And one of the things that where the art of the trade comes in is, well, now they're breaking the bottom, so that's good. I mean, it's good to know. I mean, gold is, this could be one of those days where gold really could, Kathy's initial instinct may have been right, that hey, it's so overbought, the data is so negative, maybe we're going to do like a $50 profit day, and maybe that's what's going to happen. So maybe that's really going to be the trade. So if that is, we'll watch for more sells. Gold, if I go back to my table, if I just bring back my table so we can take a look at it, I believe it continues to be negative. Yeah, it's 43 bars to the negative side. So remember, this 45, 44 was the lows of the day. Now we have to see. Now it's interesting to me because they really are breaking it hard, and that is a significant signal for us that maybe there's more continuity to go, right? So we'll keep that in mind as the day progresses. But gold has been a money tree both up and down. For the last 3 days, all we've been doing is getting long, buying rockets in gold and just making tons of money. And today we're just selling dumpster fires in gold. We're making money on every one of them. We sold this one, made money, sold this one, made money, sold this one, made money. So gold was all money all the time today. Basically $6 in gold. Six points in gold, which depending on what size you're trading, that was a $600 gain, $6,000 gain, whatever, $60 gain, whatever you wanted. It's all positive. That's the most important thing. You guys can see the labels, right? You can see the labels, which give you the narratives of the trade. You can on gold, it's when they're spaced out, you can really see them pretty well, right? So that's sort of like the story on gold. Now let's just turn our attention back to equities for a second. And we're going to go back to, let's make sure we do the NQ configuration, because this is NQ. When we look at NASDAQ, NASDAQ is sort of our bread and butter trade. Now NASDAQ looks like, a lot of times my charts look like the St. Valentine's Day massacre. They're just riddled with trades in fast markets. And sometimes we're literally, it is exactly like a bullet riddled hole, wall. You sometimes can't even know what's going on, but you can really see essentially on a bigger picture that you see all these red arrows, they were all sells, all these blue arrows bought the lows. So overall, we were net positive going to the downward direction. However, what's really fascinating to me is, remember I said to you, I'm looking for NASDAQ to break the 18,000, and it's holding. I mean, they're holding against all hope ahead of the 18,000, which is interesting. Now we got 15 minutes to the market. There's a lot of there's always lots and lots of rug pulling. Also, lots of funny pre-positioning pre-market. One of the things that happens typically in a negative fundamental news day. So today is a very sort of like, let's replay this chart story against the negative news. Hugely negative news, a massive drop of basically 2% in one minute, right? We're from like 400 to 160, and then a further continuation, right? In NASDAQ. What happens then is the overall tone of the instrument should be down. However, market makers have bought up all of this, inventory over here. There's a kind of a Maginot line here. There's a wall of support that everybody bought up here. You see some rockets, you see some counter trend buys over here, breakouts, and what they love to do is they love to ramp it. Maybe they're going to ramp it all the way to 200. They want to ramp it up. Why do they want to ramp it up? Because on the opening of 9:30, they want to sucker all the retail traders into buying the highs, and then they want to drop the rug from underneath them like a stone. That doesn't always happen, and that's not there's no means guarantee. But in my humble experience, we've seen that many times when we day trade. So we're kind of watching. So what I'm really watching for is the rug pull. I'm watching, the long-term trend is bearish. I'm watching them try to ramp it up by 9:30. I'm going to do nothing until 9:30. I'm just going to hang out here, very happily watch the rockets, red glare, and then wait for the dumpster fire to come in, and then I'll be happy to short it at that point. So while we have a little time, if you guys want to ask me any questions, and again, my apologies for being off camera, but there is some kind of a hardware. It's a choice between you hearing my voice and watching me trade, which I think is much more important than you watching my ugly face and me not having access to any screens. And so, it's like flying blind. I don't think you really want me to fly blind. So US 30. Okay, let's US 30 chart. Okay, so we haven't done the Dow. Great question. We have a little time now. Let's take a look at the Dow, and I'm going to analyze this on a futures basis, because we're trading. We're always trading. We're trading our futures prop accounts here, so we like to trade futures. But of course, by the way, those of you who are CFD traders, those of you who trade US 30 or trade NASDAQ on a CFD basis or trade gold on a CFD basis, we have all the tools for CFD traders, MT5 tools for CFD traders to make all those same trades with the same setups, with the same logic that you see here available for you. So fear not. We're a CFD friendly shop. It's just that because we're trading prop and we're trading futures prop, we're always using futures instruments as our primary guiding tool. But remember, the CFD instrument is a derivative of futures. The price of the CFD is literally based upon the futures price. So the prices themselves may be different, but direction is literally point for point the same direction. So it all works the same way on a point for point basis. So let's take a look at the Dow. Let's take a look at our Dow template. Here's a Dow. Let's see what that's telling us. That's really bearish. I mean, Dow is bearish upon bearishness. It's the bear of all bears. It's 515 bars long on the bearish cycle. That is, I think, like 4 days. What is that? It's let me just do the math. 5155 divided by 1440. 5115 divided by 1440. It's 3.5 days. 3.5 days of just relentless selling. The Dow has not seen the sun for 3.5 days, right? It's been in a total eclipse of the Dow. Oh, come on! Somebody give me a little clap for that. That was a very lame joke based upon the solar eclipse. But yeah, the Dow has just been in a very, very negative trend, which, by the way, speaks to to the point that Dow could be very weak as the day progresses, because and if you look at they're both the same. They're both down 139, 136. There's not any. Oh no, sorry, I take it back. The Dow is only down 115. So the Dow is actually a little bit strong. The Dow is so oversold that what it's basically showing us is that there may be less downside risk in the Dow because it's already been puked down to quite a lot. Dow has had, as many of you have noticed, Dow has had a absolute cement ceiling at the 40,000 level, right? It's just been really, really hard to take out that 40,000 level, and and I think maybe, honestly, I think that is a top for the near term on the general market. I think in a way, you will not, the stock market rally will not really resume unless the Dow takes out the 40,000. So if you're sort of a long-term trader, somebody's talking to me, asking me about what do I think about the US 30 on a long-term basis. If you're kind of have a bunch, make a big bet positionally, you could just be short here with a stop at 40,000 and just, bet on the fact that maybe a couple of thousand down points. Generally, we are sell in May and go away. It has been, for most years, a very, very good dictum. So anything can happen. This is the markets on any given day. Crazy things happen all the time. But generally, if you're sort of trading history, my view is that the equity markets are going to have a hard time climbing any further. And at very minimum, we're going to be distributing all the way throughout the summer, which, if you're sort of trading long-term positionally, speaks to a stop at 40,000 and just being short Dow, right? Being short Dow. Now we're still, what do we got? Like 9:22. So 8 minutes to the open. The Dow is in a basing formation. I'm happy to trade the Dow with you guys if we get a signal, but we'll leave the old lady alone. And by the way, so sort of kind of to give you the cultural differences between futures and CFDs, because we trade, because I'm definitely very bicultural. I trade both. In CFD land, everybody trades the US 30 because that's a five number product. It moves a couple of 100 points a day. It's like the greatest thing in the world to trade, right? When it comes to futures, almost nobody trades this thing. First of all, the futures points for this value are the small, so like $0.50, $5. They're tiny, tiny movements, so you're not getting a lot of bang for your buck. And all the volume action is in the S&P. All the volatility action is in NASDAQ. So the Venn diagram between the CFD traders and the futures traders, the one instrument that everybody loves, that's the friend of everybody, that it's kind of like the Switzerland of speculation, is NASDAQ, which is why we trade the NASDAQ, because if you trade NASDAQ, you're going to make money on it on CFDs, you're going to make money on it in futures. But that's sort of like the cultural differences of why we don't really pay that much attention to the Dow or even the S&P, which is very active on the future side, but not active on the CFD side. So just a little bit of lore. Can I explain the logic on the sovereign debt and gold relation? Great question. So we got a little time, so let me explain this to you. So this is what makes markets so fascinating. So the general mechanics is, if you think about this, gold has no yield, right? So if you're in an environment where a financial asset like a bond is giving you 5% and gold is giving you nothing, presumably that should be bearish gold because it's costing you money. Not only is it costing you money, but if you buy gold on credit, it's costing you 5% at least to finance the purchase. So it's called a negative carry trade. Not only is it not giving you any money, it's costing you money to hold it, and you basically have to pray for the fact that it appreciates in capital appreciation, right? So in normal times, high yields or higher yields, negative gold gets sold, right? When this dynamic completely changes and when the market loses its mind and couldn't care less, is a safety harbor, gold as a store of value asset. So if interest rates are going up because inflation is going up, because the value of paper is becoming equal to the value of toilet paper, so the value of currency is equal to the value of toilet paper, then you don't care whether it's 2-ply or 4-ply, if it's 1,000-fold or 2,000-fold. As a matter of fact, if it's if it's a 2,000-fold and it goes to 4,000-fold on the toilet paper basis, that's worse, right? You have to have jumbo sizes to pay for everything else, whereas gold stays and retains its value. So that's sort of the sovereign debt story, and told in a very, very typical New York, non-politically correct way. I hope you guys appreciate it. But hopefully that's clear to you. It's basically the idea that the market is fearful that as interest rates continue to stay high, the federal government is running 6-7% deficits. Nobody on either side of the aisle intends to cut the deficits at all because that's going to destroy the economy. Then gold starts to appreciate purely as a safety harbor issue. Does that make sense, Mr. Wizard? I hope you guys, I hope that's clear. So we're watching, we got 926 over here on the chart, basically about 3 minutes to the open. NASDAQ created a nice little base, but not they didn't really rip it up. I remember I said I thought they were going to take it up to 200. They really didn't have much juice here. So we'll give it a minute. We'll see how it trades in the first. The more interesting thing is that the stock market is kind of like a drama play. You have the first act, you have the second act, you have the third act. So we have the news act. This is the pre-market news reaction act. Then we generally have the first 15 minutes of everybody positioning on the open. What are the market and open orders? Are they buys? Are they sells? Is there any more to come by? And that is a 9:30 to 9:45 act. And then from 9:45 to 10 o'clock, we kind of stabilize and start to look for the real direction of the move. After everybody clears away their initial opening orders, then we start to see, as Warren Buffett used to say, who's swimming with their trunks on and who's swimming naked. Because if prices start to go down, those people who are caught long are going to start liquidating hard. Or conversely, if prices start going up, everybody who's short at the bottom is going to go, oh my God, I can't believe that they're squeezing me higher, and they're going to start covering. So we'll watch it both ways. Right now, a very, very young, very nascent bearish trend in NASDAQ at 56 bars, basically an hour's worth of selling, and pretty tepid price action before the market opened. Not much rug pulling going on today. Cool Bean says he's always swimming naked. Well, at least it feels good to swim naked, right? While we're in the water. Somebody's saying to me, slippage more in CFDs. Slippage in CFDs is a function of the broker you deal with. The one advantage of trading futures, which of course I'm a big proponent of, is although we absolutely love. We have a favorite broker called 8Cap out of Australia, and I haven't put up the link, but if you guys are interested, if you're a CFD trader and you want everything I do 100% free, literally no cost, and you want to have all of my services for one whole year for totally free, all you got to do is open an account with 8Cap for $10,000, which is just a typical account for most CFD traders. If you already have an account, you can just move an account from another broker, and I will give you everything for free. So we love we love CFD traders, and we want to make our experience free for them. This does not apply to Americans. Don't even talk about it, because Americans can't trade CFDs. But everybody else can definitely take advantage of that offer. As a matter of fact, maybe I'll hunt it down and I'll put the link on there, in a little bit for those of you who are interested. But back to futures, we trade futures because futures are there is no slippage in futures. I mean, the point is there is no discrepancy. There's always slippage because markets are fast, but there's no discrepancy. You're trading from a single price source, and that price source is the Chicago Mercantile Exchange. So as you can see, I never have any discrepancy with my trades. I'm in, I'm out. My targets get hit. My targets don't get hit. It's done by the CME. All right. So this is interesting. So remember I said to you that they like to do the rug pull. Sometimes they like to do the rug pull on the open. Although, God, this is really, man, what a dud. Where's the move? 9:30. Where's the move? What are you doing to me, Nasdaq? Nasdaq is like, but it's as interesting as watching paint dry right now. No vol in Nasdaq, right? No big pops. I mean, I don't know. It feels like everybody got tired and they were like, whatever. So no real mispositioning on the open. No large opens one side or the other side. No big volume swelling us. This is also deceptive. Sometimes the first couple of minutes they don't do anything, and then all of a sudden you just get this big burst of movement. Because it feels like everybody's watching everybody else. Everybody's watching to see what the next move everybody else is doing, and then they're going to start committing capital, to their position. So one thing we'll do, we'll put my trade. By the way, there's the gold is starting to sell off, but we're gonna focus on Nasdaq because it's the market open. And as I said to you, Nasdaq is still negative. We really want to be oriented negative Nasdaq. We will, wait patiently here. If we get a dumpster fire, we'll sell it. If we don't get a dumpster fire, we'll just, stay stationary. We already made quite a lot of good money trading the both gold and Nasdaq, and even the S&P on the open. And I was going to, one of the things I'm going to tell you guys is, yes, absolutely come join me in my room live. Kathy put out the links, and actually, let me put out the links again. Hang on a second. You can. I'm going to put out both of these links. One of them is for you to save money on the prop, which is like literally get a prop account for less than a cup of coffee. The other one is to come join me to trade live with me for like a whole 3-month coaching course. But I'm also going to, just to let you guys know, so for those of you who are interested, we're going to make this a real thing every single week. I'm going to start trading live on YouTube every Tuesday, Wednesday, market open, 9:15 to about 10:30, every one of those days. So look for that. I'm going to be creating those things, and when we trade live, it's going to be a lot of fun because it's just going to be total pandemonium most of the time. So counter trend rally. Now remember I said to you, I was looking for that 200 level. I thought they were going to run it up to 200. They may still do that. They may still may still be rocketing it up all the way up to the 200 level on the move before they kind of decide to rug pull the idea. In the meantime, what's interesting about, remember I said to you, gold has kind of broke that 45 level, trading underneath here. There was a good signal on gold. I just, as I said, I can only focus on one thing at a time. So that's the other thing, by the way. When you're scalping, you absolutely want to focus. I mean, we can look at both. Hang on, let me just let's see. I think if I do it this way, yeah, we can. So this is what is this? This is Nasdaq. The problem is, the thing I don't like about doing 2 charts at once is, and this is going to be gold. So we're going to go here, We're gonna go to gold. Gonna get rid of this. It's just there's always a limited amount of real estate. Let me just clean this up a little bit. Oh, sorry. I'm gonna clean up these charts. We'll keep both charts on just so you guys can watch both gold and but I'm gonna get rid of everything I possibly can on my charts so it's not cluttering your view. Gold just went green again. So what is this? What is this? Where is this? Oh, let me. Here we go. This style tables. Okay, off. So I'm gonna go this way, like centralize this. But what I was gonna say is, gold is negative, right? So the dumpster fire worked here. The dumpster fire would have worked here too. It was sold 41 all the way down to 36. I didn't take this signal because I just wasn't, now I can watch both charts at once, and that's about sort of like the most I can do from a scalping perspective. And it's the most you need to do. I'm actually perfectly happy scalping 1 or 2 instruments a day. There's more than enough money. As you can see, we're already 6 or 7 trades that are good in just in the first hour. And generally on days like today, we trade till about 11 o'clock, and there's lots of opportunities there to go. So NAS continues to to rocket higher, but it's doing it against a negative trend. So we're not taking those trades. We could, the art of the trade, if you really want to, sometimes when I want to go cowboy and I just want to put on a whole bunch of trades, I will buy these trades, and a lot of times they work, but they're not as high a probability trade. And my whole point is, I don't want to show you my worst habits, my worst trading habits. I'm really trying to be on the I'm trying to show sort of like the better trading habits rather than the usual mayhem that I love to do, because God knows nobody loves to overtrade more than I do. So very, very much in my room, it's do as I say, not as I do. But today I'm really trying to follow my own advice and not overtrade. But yeah, do I love to buy the counter trend trades? Absolutely. Would I love to have bought this in greens? Yes, because my personal mentality is to always fight the man. My personal mentality is to always be contrarian. However, it's a very expensive philosophy to have in the markets, where where having an ego is really a dumb thing. You can have an ego in other areas of life, but in the markets, you really want to trade on the right side of the bigger trend. You want to be trading with the right direction. So gold is falling to close below the 100 SMA so far on the hourly chart. Yeah, gold is negative, which is why I'm not buying the rockets. And by the way, if you bought this rocket, that would have been a failure. If you bought this rocket, it would have been a failure. Only this third rocket would have been a success. And that's a good example of like you trying to be smarter by the dozen, right? You trying to be too cute for your own good. This is why I don't do it anymore. I love, as I said, I love to buy bottoms, but they're not high probability trades, right? Let the market do its thing. So we're happy to watch it. 3 minutes into the trade, and no, 7 minutes into the trade, and it's a little boring. It's nothing going on here. Kind of surprising. So, but we did, by the way, we're climbing to the 200 level, right? Which is kind of interesting.
Hey Boris, did you get a chance to show them my Eurodollar chart on the set and forget it? So for those of you that were with us from the very beginning, I talked about how we were in a swing, turned our Eurodollar trade into a positional trade.
Do you want to grab your chart? Do you want to grab the screen from me? Can you do that?
Well, it's just in Discord. I guess I could.
Oh, it's in Discord? Okay, I can show them Discord. Hang on.
Yeah,
let me find the chart.
You know what? Let me do it.
Yeah.
It's fine. Yeah. Let me do it. I'm gonna grab the screen for a minute.
Wait, I thought you wanted me to do it.
Go ahead. It's in Set It and Forget It.
It's in. Okay, hang on. Let me find you.
Set It and Forget It. Yep. No, that's not Set It and Forget It, Boris. Set It and Forget It.
Oh, sorry. I'm looking at the wrong thing. Okay, let me get to the bottom of this.
Okay, so this was when we turned our Eurodollar day trade post news into a swing trade off of this zip sell signal. And you can see the zip sell forms with a white candle, red background. This is part of the Pass the Prop Academy that you get access to my indicator. Can you close this for a minute? And I'll read through the instructions. At the time at 8:36, it says sell to your dollar at 107.96. Stop target. Now we're not quite at the first target, but we're almost there. I've actually taken the profit already in the first target because we are so into the move already, and we're trailing our stop on the second target. If you can pull up, can you pull up? Would it be hard for you to pull up a zip chart, Boris, just to show what it looks like now?
Give me a second. Hang on. This is. Let me see if I can find it.
It's okay. If you want, it's easy for me to pull it up. And then just
it'll just take me a second. Just hang on. FX majors. I think I have the zip. Is this I think this is the zip. And this, yeah, this is the Euro New Zealand. Let me go to the Euro dollar. Euro dollar. Okay, here's the zip chart.
Right. So we had a beautiful zip sell signal right at after the data.
At the 8 o'clock New York time, right there. Yeah.
Right. We had a beautiful zip sell signal. Took the short. Remember, we flipped the day trade into a positional trade. We're short going for whatever the market gives us. I mean, we're already taken off some money off the table, and we're trailing our stop by 30 pips from wherever it is at right now. So we're beyond a break-even stop, and we'll see. I am very bearish euros going into the ECB meeting. Obviously, today's CPI number was very hot. So this is how we fuse fundamentals with technicals. This is how we basically combine, select the best trades. So many of you are asking about yen. I don't know if you got into yen recently, Boris, but I have talked, over and over again about how we want to make sure that fundamentals and technicals are in sync. And, dollar yen, fundamentals are there with the US CPI, but I didn't want to take the trade because of the intervention risk.
But
so
if you took a punt, this was a ridiculously good trade. Look at this. The zip trade at 3 o'clock in the morning gives you a buy signal here. If you just took a punt on it at 51.83, that would have been like, wow, like 100 pips right then. Really nice move.
But, let's be realistic. That there were.
No, let's dream. Let's dream. We're dreamers, Kay. We're dreamers. No, just kidding.
There's so many opportunities. The euro dollar is the smarter, lower risk trade for a strong US data. We talked when we prepared for our day trading, for our news trading, we said if it was a weak number, dollar yen, dollar Swiss, those are the ones we would have shorted. But it wasn't a weak number, it was a strong number. So we prepared for euro dollar and euro dollar and Aussie dollar as our trades. So that's basically, so the swing trade is working nicely, and that's the update I wanted to give everyone. And I don't know if you had a chance, Boris, to talk about Pass the Prop or or Apex.
Or about Apex, just casually. I'm just about ready to. I did talk a little bit about this. And Kay, you know what? If you could do me a favor, I also told them for everybody who's a CFD trader that obviously. If they open an account with ACAP, they can trade with us for free. So if you can give that ACAP link in there as well for anybody who's a CFD trader, we'd love to have you guys on board because that's a really, really great deal. We love that broker because they basically allow you full access to everything that we do for no money whatsoever, which is really, really great. So coming back to, sorry, so it's still by the way, very quiet on the front. We really, we had all this great activity. We made all this money in gold early, Kay. We actually had 3 for 3 winning trades in gold, as you can see here, and 3 for 4 winning trades in NASDAQ. But
that's great. Guys, tell us if you're making money in the chat. Let us know if you caught these gold trades.
Yeah, I think a lot of them did catch the gold trades. They were very happy. But right now, as we see, we're basically kind of counter trending. There's lots of rockets. There's rockets red glare here. We're getting a NASDAQ sell. Let's get, hang on a second, hang on. The problem is, I can't trade and talk at the same time, right? It's like chewing gum and doing this thing. So I'm a little bit late on this thing. Let's see if this works. Okay, I'm in this trade. So just one last trade, we'll give it a shot. This is the NASDAQ, a little bit of a dumpster fire. NASDAQ, I said to you about 200, right? I said 200, but no, it's actually gonna, really rocking against us, but it's fine. As I said to you, at any given time, it doesn't matter how the trade is on any individual trade. It's the complete combination of all the trades that really matters. So Kay also goes through this. We'll go through 2 or 3 losers in a row, and then I'm going to hit like 4 or 5 winners in a row. It just happens. I want to take the process with you guys. I wanted to make sure that I've been very good today, Kay. I have not did a single bottom fishing trade, even though today was a great bottom fishing day, because I'm trying to show the best practices, not my worst habits. Like my worst habits is always to bottom fish everything, and I'm really being good in live today and just showing them only the process trades.
I'm so proud of you, Boris. I am very proud of you. It's definitely been a solid day. And yes, we have CAD, Bank of Canada, in 2 minutes. It's going to be tricky because they're the rate decision, and then they're presser. So and for me, I always say that it's important to know when to trade and when not to trade. And there's certain times a day where I trade, there's certain times a day where I don't trade. I always have my trading done by the time Boris starts trading at 9:30. So we have the BOC rate decision, but I think this is more of an opportunity for Asia session trades or for swing trades than for day trades. But I think they're going to be dovish. I think they're going to be, so I think it's going to be positive for dollar CAD. And that's, my opinion. And of course, later on, we also have FOMC minutes, but that's, certainly much later on in the day. But don't be greedy, rock and roll and gold. We got a lot of trades in Eurodollar. We're banky pips, and stick with the winners for now. Don't be greedy and try to press your luck with a CAD trade into the London close.
Yeah, that's great advice. And as I said to you, remember we talked about the idea how sometimes the first move may stop you out, but then you get the second directional move. So we're getting a second dumpster fire signal right here, but I'm waiting very patiently because remember, it has to close the candle. You don't want to commit early because it can be a fake out. This is a really big. This is one of those. It happens all the time, and you just have to mentally be prepared for it. We had the right direction, and it just simply turned itself around. Like it stopped us out and turned itself around, to the downside. Now it's 9-10 seconds down, so I think we can, we can enter the trade and sell it and see if we can, maybe this trade will continue to the downside. So this is the second dumpster fire trade. Quite a big reversal, and now we're trying to see if we can get the continuation to the downside. It looks like we're almost there. You know what I'm going to do? I'm going to flatten out. We'll take it for plus like 35 ticks versus plus 40 ticks because it was already a big move. But here's my point. That's exactly. I'm going to end the trading on this trade because it's the good example of process, right? We were right on this, but the market just gave us a bad tick. It just spiked up against us, took us out, gave us a secondary signal. The secondary signal absolutely worked, and you see how the secondary signal. We came in here on what did we sell this? We sold it 33. We bought it 26, right? We could have easily bought it 23. Would have done the full trade. So you can see that once you commit to the process and once you have faith in the proper process, it works really, really well. Not to mention the fact that that all the gold trades worked really, really well. And we're going to go. So now, if somebody wanted to discuss the history of the trades we did today, I'm going to discuss the trades that I did because that's what you see on my charts and on my account. Kathy summarized all her trades, and she'll post it in her Twitter feed everything that she did. I think she did a great job here. I think she took like I don't think she even had one single loser on the continuation trades in Forex. I had a couple, but I had 8-9 winners against really only 2 losers. One of them completely, I was right on the trade and it was just bad luck, and that is perfectly okay. You're always going to have some element of bad luck, which is what we this is why we trade fast, we trade small, and we trade frequently to make sure that the overall numbers are all on our side. So reviewing the NASDAQ first. We in the post open hour, we took this trade to the short side, got stopped on the retrace, just a spike out, got the second dumpster fire signal, got short against a bearish short. Earlier in the day, we took all the dumpster fire signals here to the downside and covered them all. So there was actually one again, spike out. The NASDAQ is notorious for spiking out. In other words, it sells and then retraces back against us. So that we had 2 retrace trades, but 1, 2, 3, 4 winning trades. So 2 negatives, 4 positives on NASDAQ for the day. And on gold, it was just all money. And I could have had more money. I'm just focusing on NASDAQ because I really don't know why. I really should just be trading gold because that is literally, as I said, the gold is the money tree these days. So on gold, gold turned negative. We had a sell trade, a dumpster fire trade here, made money. Dumpster fire trade here, made money. Dumpster fire trade here, made money. Did not take this one and did not take this one. Either one of those, both would have made money for us. We just simply, we're focused on NASDAQ. But overall, so you're talking about 7 winners against just 2 losers in the scalping session. So I hope you guys really enjoyed that part of it. I'm going to post my links again here. If you guys want to do this with me every day, if you want to have the ability to pass your prop, what I do is the following. I'm going to give you the link to our favorite prop firm. Gives you massive discounts, like literally the price of brunch for a $50,000 account. So all you got to do is pay for that. And then if you want to pass the prop, you take this course with me for 3 months, every single day.
Can you show the slides, the slide boards with the value propositions or the page? Sure. Click on the page.
Yeah, hang on. Let me pull up the page. Let me just pull up the page on everybody's screen here. It's going to take a second, just a second. And it's got to get big here. Okay, it'll just take a second for YouTube to show it. So I'll just wait for for YouTube to show it. But it's a really really great fun thing because it kind of like we threw everything into the kitchen sink here. Not just my ideas, but Kathy's ideas. Not just my indicators, but Kathy's indicators. Full support and this is really, really valuable. Like I see this every week at how valuable this is. Every Tuesday night, we have a coaching session and we go through, because in live trading, it's like war. You really don't have a chance to think. You're just reacting. And it's hard to really fully learn in an active combat environment, right? So what's great is with Pass the Prop, every Tuesday, we relax. We have a full hour, sometimes even an hour and a half, where all we do is just discuss the absolute fine points of all the strategies, of all the ways that you could trade them, of all the intricacies of the indicators and all the intricacies of the EAs, the MT5 EAs that we have working for you. So really, really give you an incredible education in the tools that is education for life. Whether you stay with us forever or you just, you leave us after 3 months, you become so much better a trader. You truly become a sensei in understanding how markets trade. And the beautiful thing about this, what I love about prop is, think about this. You learn the skill, that skill stays with you forever. You can, trade markets, go away from them, come back 6 months later, spend $50 for a prop test, pass that test, and now you have $50,000 of not your own money, but the prop firm's money that you can trade and hopefully generate income for yourself. It's just an incredible both vocation and avocation for anybody who's interested in the markets. It is so much better in many ways than just constantly burning your own money and learning on your own money. It is, once you learn the skills and then you can trade other people's money, it's just an amazing proposition. So that's why we put it all together. We think this is really the future of retail trading, and we'd love for you guys to join us in this future. That's the link to Pass the Prop. There's a link to so what would happen if you need more coaching next 3 months? Most people, this is a great question. Most people that naturally upgrade into a year mentorship with us, or even a lifetime mentorship with us. Once you come to the Pass the Prop program, then we'll give you huge discounts and encourage you to come hang out with us, so you could easily upgrade into a much longer term. Like most people who trade with me in the room are actually lifetime members, and that's a great deal because it's like a one-time fee, and then you have us for life. Literally, so we've had some people in our room, I'm not kidding you, that have traded with us for a decade. It's one of the guys has 7 prop accounts that he's working right now. they're better traders than me in the lifetime section. So that's, if you want to do that, love to have you. I love those guys. So we'll message me, Winfred. If you, first of all, come in for Pass the Prop, message me, and I'll be happy to give you. So Karen is a lifetime. She says she never regretted it. Yes, Karen is the best. Karen is one of my favorites for lifetime. Yeah. So whatever your choice is, whatever your budget is, we made it absolutely flexible, and we'd love to have you for life. But if you want to come in for 3 months, we definitely would love to have you for the trading vacation. So links are there. Click those links. If you want, let me just type in my email address. If you have any questions, at bktraders.com, you can email me there. I'll be happy to answer them. Stephen is saying you can attest that VK is the best has been. I'm not paying any of these guys. All of the testimonials are absolutely organic. I promise you. Pass the Prop for Tradeovate. So I use Tradeovate, Ace. The reason I have Ninja as well. I'm actually my own personal prop account is on Ninja. We have both. We even have Ninja tools. The reason why I use Tradeovate is because, as you can see, it's so much more intuitive on TradingView. In order for me to teach the setups, and in order for you guys to see the setups, a lot of people really prefer Tradeovate to Ninja at like 3-to-1 ratio. So that's why we've gone to Tradeovate, and basically not even Tradeovate, but actually trading through TradingView, which is really intuitive. I mean, I love how easy our indicators are now in terms of being able to spot the trades, because they mark the entry points so well. Kathy's putting in all the links, so you guys feel free to hit us. God, I love it, Kay. We have 250 people watching us. Nobody's left. Everybody's having a good time. They crank out
Actually,
money.
we had 500 people watch on stream earlier, so I think some have left, but still, it was a really good attendance.
I was saying to everybody that yes, we're going to do this as a continuous thing. So everybody should this is our sort of first attempt at doing this, and we're going to do this every single week. So
well,
you guys
of course, tell them exactly when you're going to be back on.
So we're going to make this a plan to trade live 9:15 New York to 10:30 New York, 9:15 to 10:30 New York, every Tuesday and every Wednesday. Great days to trade, usually in the stock market, lots of activity, lots of news flow. So Tuesday, Wednesday on YouTube, it's going to be me, just me and my ugly face. I will be on camera because at that point we're just going to be using YouTube. We're using streaming software, and just kind of did some funky things with my camera today. But you didn't miss my face. It was really all about the trades, right? So it's Kathy that you really want to see. So anyways, is this scalping? It's what I'll be doing live trading is scalping. But here's the thing, Bashir, today I didn't get a chance to show it. We can turn a lot of our scalp trades into swing trades if you want. The techniques and the functionality is there. I just simply was doing very fast trades today because there's just so much going on. But I'll be showing quite, I only showed you, I think, 1/5 of the possible. You see the chart was very clean. The chart has a lot of functionality on it, far more than I showed you, because I just didn't want to overwhelm you. But yes, there's a lot of functionality, and it's not. And if those of you who are trading the prop, by the way, sort of just got to let you know, this is just 1 out of 3 strategies that we trade in prop. There's a strategy that we trade that is just literally 1 trade per day. People love this, especially people in Asia who are coming in at night and they want to do 1 single trade at the opening of the New York session. They love this trade. We do that trade. So we have 3 completely separate strategies for every taste, flavor, and desire in terms of how you want to trade. During live, I'm scalping because I'm a degenerate trader, and a lot of people in my room are all degenerate traders. But for those people that really want position, we have unbelievably good quality trades and all the tools to make those trades happen. Not only do we have the trades, but we have the execution tools to happen. So that's why Pass the Prop is such a good deal. All of that comes together with it. So if you're looking to try and
pick a bottom in the yen dollar, buy out of the money. Oh, buy out money leap calls. Yeah, yes. So very nice comment from Hub Philippines. He says, he's so fortunate today. My friend recommended you guys. Love you. I'm glad. I'm so glad you guys discovered us. Tell us, please, 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 anybody you know who's trading, tell them about us. We're going to be live Tuesday, Wednesday. Let them come find out. I think they're going to love this. We try to make it simple, clean, and fair. You see, nothing we did today is bogus. We trade real markets, real prices, real accounts all the time. We do not shy away from a live trading. And good, bad, or ugly. I get stopped out, I win. We show you everything. So if you really want people to kind of experience real trading, not bogus edited trading, not furu trading on YouTube where they only show you the good trades, please come, because our process works. All of our lifetime members have passed prop tests, and they're all trading real money. And that's what I hope to do with you guys. It's that's the game plan. Great.
All right. Thank you, everyone. We're going to close up the live stream. Have a great day. We'll be back with you next time. And watch the come join my Monday live streams, where every Monday at 8:45 I talk about what's going on in the market for the week ahead. Boris is there as well. So join us Monday, 8:45. We will see you all then.
Yes, great having you guys. Thank you for all coming out. Tell all your friends. We're going to be a regular presence on YouTube now. We'll see you guys later. Bye-bye.